Morning, everybody. Hope you guys are doing well. Just running the normal backtesting Q&A stream. So if you got any questions or if you want ideas covered or backtested, we can put those in the chat and cover those. Otherwise, just wanted to go over a couple of the setups from the previous week, look at some time-based stuff, and then I'll probably just keep it shorter. Probably won't go over more than an hour today. Then stream tomorrow or Tuesday. But I thought the previous week PA was pretty solid. There's some things we can learn from it on a time-based schedule and just showing the examples um, of when entries happen and when exits and partials happen. It's important to study these things. Let me stop streaming here. I'll go to the Notion really quick. Let me filter this too. There we go. I think it's starting to stream over here. I'll just wait. There we go, finally. All right, so I'll cover, this is Friday's PA, I believe. So when we're looking at high quality setups to capture the entire New York session range, which is preferably if you're trading intraday and you have these lower time frame charts, you want to be capturing at least majority or 50% maybe of the entire kill zone's move. You don't have to get the entire daily move and go into lunch and stuff like that, but just between 8:30 and 11 or even 8:30 and 12, where do the majority of the high quality setups form? At what time do they enter and what time do they exit? So on majority of the days, you're going to have your 9:30 Judah swing entry slightly after that, and then it continues into 10:30 to 11 o'clock. Now you can also narrow this down, but it's good to wait most days for the first 15 minutes to play out after 9:30. The days when you won't wait is maybe on 8:30 news days where 9:30 can just dump off or climb aggressively without forming any Judah swing and completing the 8:30 move. But waiting for the first 15 minutes after 9:30 is best because you can have two Judah swings. So you can have an immediate Judah swing that starts at 9:30 like this, and then you can have basically a second one, or the true one, where it takes out buy stops in this case, and then it trades lower. So it's best to just wait after 9:45. And a majority of your high quality trade setups that you can use to frame like basically the entire AM session move is going to happen in this little macro kill zone. So within 9:50 to 10:10, you'll find entries and even exits sometimes. Now in this example, you have two different entries given, one in premium with this tiny fair value gap and this one as well at 9:57, and then another one at 10:01. Now I want you to notice these are just the screenshots from April. How many times we form a low around 10:30, even around 11 o'clock, but around 10:30. So you have 33 points up until the short-term sell side taken there at 10:10, and then we continue down into a London low, so IRL to ERL at 10:28, and then it starts to chop around for the rest of the morning session. Here you have another example where we have 8:30 news. So when we have 8:30 news, know that the entire kill zone is going to be shifted back an hour, but you can still get these expanded moves like this. This is the Omega setup from the Notion PDF. But anyways, entry given within the macro time, 9:54 and 10:03. Another entry given here at 10:12. You can see the first partial, most times you want to see hit between 10:10 and 10:20. So if you're using a macro entry, You want to see either your target, your full target, and that's going to be your IRL or ERL on the higher time frame, met by 1020, like in this little 10-minute window. Or, I mean, if you're taking a partial day, then look for the full pull between 10:30 and 11 o'clock. But this is how you are able to hold trades longer, is just by seeing it and screenshotting over and over and over again. You can see how many times, like here you have the buy side, and the IRL met at 10:37. Go to this example, pretty standard New York trade setup, but SMT at the highs, trades lower, 1047 entry, given within the premium fair value gap after the SMT. So it's still 2 minutes after the 15-minute mark. So it would have been a valid entry. But if you look at this little exclamation point, this is where the ATM model would then allow myself to start hunting for setup. So trades lower, 15-minute changes to delivery, for value gap right in there. I don't know if you can see it. 955, 1007, even in here too, at 10 o'clock. Now we're given partial opportunity in here, more than 50 points or so within this little window. It drops. Now we're looking for this ERL to be met. And if we put in a low, in this case at the wrong time, not between these two price levels, or not between these two time levels, 10:30 and 11 o'clock, you can expect whatever low is formed within this range to be taken again. So in this case, you could be holding for the 15-minute PD array plus time. And then the low here is put in at 1054. Here's an example where we have 8:30 news. So the full pull is done by 1010 to 1020, but drops down, takes out 8:30 low. We have SMT there. And we're going from IRL in this case to the ERL, and we trade up. There's a tiny breaker in here, drops in. Now, if you watch the most previous video on YouTube, you know that the two preferred entries are going to be either your unicorn setup, where we don't need to see it drop into premium or discount. So if we are able to trade through a breaker and close above it and confirm it as a breaker, and there's a fair value gap that lines up with the breaker. So in this case, we have a low, high, lower, low, last up closing candle, expand that out, and your fair value gap is right on top of it. In the scenario where you're using a unicorn setup, you don't need to see a drop into discount. So this fair value gap is most likely going to be left open as a breakaway gap, unless there's a order block that's below it that we may have to come back and touch. But when you're entering off a breaker, you can just enter on the first gap. It doesn't have to be in premium. Then you have another entry type. Your two entry types, it's going to be these two. We have an expanded leg. It could be up or down. And we drop into discount in this case. We have fair value gap there and here. Drops into discount. Refers back to the order block. You have multiple entries here, 1003, 1007, and then it trades up, taking out the ERL at 1015. And then we drop and consolidate for the rest of the silver bullet hour. So just monitor these times. At 8:30 news days, a lot of times your silver bullet hour, either the first 30 minutes or the latter 30 minutes is going to be consolidation. So if we're moving those first 30, expect the latter 30 to consolidate. Not moving the first 30, expect expansion in 10:30 to 11 o'clock. Here's another example. Here we have 8:30 news, partial in the ERL, hit by 10:10 to 10:20. Obviously entry given within the macro time and premium in this case because there is no breaker, SMT. And then the low put in at 11 o'clock. So when you study these things, you get more and more confident of holding runners or holding for larger ranges when you know that the daily range is likely to expand and form and stop at a specific time. So even if you were just to wait for your higher time frame for value gap or ERL to be met, and it drops down like this, creates a low. You don't have any 8:30 news. This low is formed at 10:20. So if we truly wanted to remain bearish, you have the SMT up here, then you know that this low will be taken out, and you can form a whole model just based on that, right? You wait for a false low or a false high to be put in between 10 o'clock and 10:30. You wait for it to retrace into premium dealing range, and you look for a market maker sell model or buy model just based on this framework here, and that could be your silver bullet entry too. So he trades up here, takes out short-term high, even right here too. Drops down. You have a second stage of distribution, probably on a lower time frame chart, and then the low put in at 10:43, and obviously another one put in right at 11 o'clock. Another example of E30 news. Target reaching IRL. We went from ERL to IRL and discount 61 points there at 10:16, and then it trades all the way back up. So depending on the profile you're looking for, the actual market profile you're looking for on an 8:30 news day, you can expect either to hold runners, or obviously if you're targeting IRL, as soon as that target is hit, I would say it's best to close out. Going from ERL to IRL is inherently going to be more difficult because you don't know how far into the IRL we're going to reach, or if there's multiple fair value gaps in premium or discount. It's difficult sometimes knowing when it's going to stop, right? So that's why time comes in. If we're don't have any E30 news and we're filling a first fair value gap at like 1020-ish, right? And it's in premium, we just took out sell side going into premium. You can either expect that high to be taken out again, can take off maybe 80% there and wait for it to be taken out again, or you have to just trust your gut and wait for it to reach into the further premium array and not take anything off at 1016. But that's all just comes with your own stop management rules and risk tolerance. During no news days, we're looking for an entry between 9:30 and 10 o'clock. And when we have news days, we're looking to trade in the macros, if I'm not wrong. I would say most days you're looking for an entry between 9:30 and 10. On news days, preferably it's your last entry that's given. I would say last high quality entry that's given is between 9:30 and 10, even between 9:45 and 10 o'clock. On a no news day, it can really be any time between, I would say 9:30 and 10:10. But it's basically the same thing. It's just you have to know when the trend is likely to stop moving. On a news day, a lot of that volatility is going to come in at 8:30. So if you know, it's kind of like I guess a gas engine. When you start the engine, there's almost only so much gas until you got to refuel it. So if the engine starts over here, we're going to have volatility all the way up until another injection. And then it kind of dies down. And then the rest of the silver bullet hour is low probability. So if you're studying silver bullet, you're not going to be trading most times on E30 news days. At least for that larger run, you still find entries. But if you want that larger run, it's going to happen on non-news days. Like, let me see if I can find an example here. No E30 news, larger run. I would say 110 points from the entry down to the exit. And here you have the first 30 minutes of silver bullet hour expanding. Last 30 minutes consolidating. Obviously, there's more entries here. 1030 forming the low on the ERL. No news. Another example here. High put in after 1030. So it's important to screenshot these things and mark out the times that everything is forming at. If you don't mark out the times, then you don't see the patterns. And you don't really get the confidence boost you would as if you were just taking regular screenshots. Wouldn't it be better to have a fixed risk to reward ratio, for example, as to 1 to 2, as I think that'll also increase our win rate? I don't really care about risk to reward. It's not something that I use when I'm trading. I just trade the model and what's given to me as a stop loss and take profit zones. But I know that there are people who are highly interested in risk to reward, so it's really just up to you. If you want to frame all your setups on a 1 to 2, I think that's great because then you only need, 50% win rate to be profitable. If you have a higher win rate, obviously you don't need a higher RR, but it really just comes down to personal preference, I'd say. Like, if I was extremely confident in my setup, say it was an 8:30 news day, there's an entry at 950, and there's only 25 points till London low, and that's my target, but we have a 30-point stop loss, I'll still probably enter that trade, even if it's a negative RR. And some people will think that's crazy just because, oh, like you shouldn't be trading negative R. But to me, I'm trading what's given in the framework instead of worrying about the actual numbers, because I know as long as my strike rate is high enough and I'm avoiding the low probability days, that um, the numbers will crunch themselves. So, how to get confidence to hold trades longer than closing out in smaller profits. This is exactly how you do it. Take screenshots of basically your everyday setups. So I have this whole notion of mine personally. I'm not going to send all of this out. I think you should be doing this by yourself. So I'm not going to share my own PDF, but um, take screenshots of your setups every day, whatever your model is. And if it's not there on a specific day, just screenshot the day and go down from 1 hour all the way to 15 to 5 to 1. Um, and on each time frame, you're going to mark out what you think is important. So I have an hourly chart here. I basically use the hourly like a daily chart. So what's the closest swing point, swing high, swing low for value up we're going to reach into. 15-minute chart looking for SMT, IRL to ERL. 5-minute, I'm looking up premium discount for order blocks for the most part. I'm also marking out when a trade setup is valid, and then the 1 minute is going to have the most amount of work, annotating basically everything that you think is important. So the way you get confidence to hold trades longer is studying when do the trades end and just looking at all these pictures. Look how many times time is important, right? So even not even looking at the price of how far we go, don't worry about how many points you're getting on the move. Worry about when is the draw on liquidity met, right? Because it's gonna vary. You're not gonna have 110-point days every single time from an entry to the full exit. But look at time. So 10:28 here, 10:37, 10:54, 10:15 because of 8:30 news here, 10:11, 11 o'clock, 10:43, 10:16, 8:30 news, 10:30, 10:35, 11 o'clock, at 10, right after 11 o'clock, but you have a low put in right at around 10:30. No news in this case. Here you have 10 o'clock news, but high went at 11. So all these examples show that um, if you can get a high quality entry, your high quality exits will most likely be around the same time every day. So holding towards I think taking partials is important. So taking partials so you can basically reduce the risk and pay the trader on the way. So either you can have set point levels like 20 points, 40 points, where you take partials off, or I think market structure base is better. And the way I would take it on market structure is obviously reaching into premium or discount first. So if you're entering in discount, look for premium or whatever PD rate is closest within 20 to 40 point range is probably solid. So if you're entering here and this is 20 points, take one off there. Second one off in discount. So whatever discount per value gap you see, you want to here. And then you have your full terminus as another partial point. And then your last partial point should always be time. So by 11 o'clock, I would say, regardless of whatever you're entering on and what your target is, most times by 11 o'clock, you want to just close out because we can start to have larger retracements and poor price action. So journal, I guess the answer is journal, and make a mental note and really understand that the times is going to be the most important when you're holding trades and not the actual point range. If you're worrying about, it's going 40, 50 points, you're going to be lifting the weight. So over and over and over again, you have to try and train yourself to hold for longer. But instead of just watching that point and counting the money as it goes up, just look at the time scale there. Do you have a YouTube video on what makes a trade low probability? I don't think I have a YouTube video on it. I think I do have. A trade low probability is more of its feel for sure, but there's conditions before a trade is even entered that you can identify low probability stuff. Let me see if I can find the Q&A post really quickly. Here's a short list. There's obviously more. But I would say anything pre 8:30 news is more difficult. You also have, I don't know, Mondays, I guess. Mondays, most times during the week, is going to be a little more difficult than the rest of the week, unless you have news randomly on Monday, which you rarely have, or we have no news on Tuesday. But even then, Mondays are just 50-50 most times. Can you go over why your first example, Friday, was your first example breaker was invalid and why your third example breaker was valid? I want to know what I did wrong. Um, Here's the first example. Is this the third one you're talking about here? Okay. So breaker wise, you're talking about this entry long, right? Um, so on the entry long here, well, first of all, the SMT is present. So anytime there's SMT, you have to be careful of that the first 15 minutes because that's going to tip its hand to you of where price is going to go. So always look for that SMT between 9:30 and 9:45, even 9:50. There's going to be SMT present between one of the three indices. Now, this up closing candle range, if you disregard the SMT completely, as you trade through it, there isn't really any fair value gap that is given, let's say, a larger gap, right? Because fair value gaps forming show you the strength in price action. So if there's a large gap forming, that shows you that price action is willing to draw to one side over the other and leave gaps on the way. Right? It's speed, which creates inefficiencies, and the inefficiencies create consolidation, which is efficient price delivery, and then it goes back and forth, right? So the fact that there's no large fair value gap in this range, and we trade basically all the way through it. Basically after this candle right here, I don't know what time this is at. Say maybe 9:49, 9:48. This trading all the way through the breaker invalidates this breaker completely to me. So breakers, you want to see, in this case, the upper 50% used. And if there's a gap that's layered on top of the 50%, a large gap, you can use that as an entry point. So visually, to me, this just doesn't fit my, definition of a clean breaker setup. And that's just because I've seen so many breakers and unicorn setups play out where, once we drop below that, I'm not interested. So a couple things, the SMT, lack of a large fair value gap, and then it trading all the way through the breaker completely. Now for the third example, here we don't actually really have a true breaker. Is this the third example? It is, right? There's never really no, unless there's a 5-minute. Look really quickly. Yeah, there's no 5-minute breaker either. So on this day, unless you were looking at this SMT, but it's hard to tell if there was any true SMT there. Yeah, I don't have the picture. Oh, I do. I guess when you're looking for breakers, it needs to be a full closure through them. There needs to be displacement past the range. There most times is going to be SMT. And then if there's an order block formed, or if there's even just looking at the breaker, you don't want to see 50% of that breaker traded through with a candle body. So wicks can come down, that's fine, especially if there's an order block or something we have to refer back to. But this range in here, also even just the time element, right? The first 15 minutes really is not printed. You have two Judah swings in here, so you want to see which one is the true one. That's why I think it's best to just wait for the macro. As soon as the macro starts, we're already below the breaker completely. Trades back into premium. That's why I didn't short here on the stream. I wanted to wait. Dropped again. Bearish order block with the fair value up in premium. Shorted this 1001 candle. Wrote it down on the 33-point sell side. But I mean, that's, you only need 50 points a week. So on all these examples, look how many times 50 points is played out. Yeah, sometimes I'm just going to read it wrong, but this is why it's important to just learn from it. So if that was your model, then and you executed on it, there's no reason to be pissed off if you read it wrong. Because there's really two ways you can lose. It's either by reading it wrong or not following your rules, either your psychology rules or your entry rules. So if you can break it into those two, which one did you form? And if you can just read it wrong, that's better than breaking the rules in the long run. You have a video on setting up screenshots on Notion. I do. It should be posted in notes and PDFs. So if you look in there and scroll up a little bit, there's a video on how to set up Notion and how to set up OBS right below the PDF. It's about like a 10-minute video. It's not up on YouTube, but it's just there. Don't you need to go with order flow for using breakers? Breakers in themselves are a change in order flow. So the reason you can trust breakers is because that is basically your first change in the state of delivery. So as you get a confirmed breaker, you have to look now for which order blocks are going to hold. So the order flow on a higher time frame will support your breaker idea, yeah. But the whole reason that a breaker is high probability is because it's almost like a true market structure shift. It's breaking the order flow and then returning back to use it as an inversion level. And then you can find an entry off that. Yeah, 2 Judah swings can happen, and that's why it's best to just wait either between 9:30 and 9:45 or 9:30 and 9:50. And if you look at a lot of the days, here we have 2 Judah swings. I mean, it's not really 2 Judah swings. It's just visually it looks like 2 Judah swings, right? Because if right at 9:30 we trade lower, then we come up, that's the true Judahs. Here we have just a 1 Judah swing. Here we have 1 technically with the SMT. Here we have 1 ending at 9:45. Failure to Judas, but we have SMT up there, so makes sense. And we also have 8:30 news. So when you study the time elements, I'll put the time PDF out probably by the end of today, maybe by Monday. That'll include things like the double Judas and what to expect basically with every 30-minute window of surrounding times. Let me see. I'll pull it up really quickly here. So this is what it's going to cover. General understanding, 8:30, 9:30, 9:45, 10 o'clock, 10 to 10:20, which is what we covered. And obviously the ending of sessions. I'll probably just go over it and add a few things, and then I'll send it out to private group. It'll be posted either in notes and PDFs or in the Q&A section. So kind of just a standard day, just reviewing basically the setups for the week. Let me go back to TradingView really quickly. Discord's kind of delayed today. It takes like 3 minutes for it to switch the backtesting thing. It's going to switch. There we go. Even using the 5-minute just to hold runners is good. Like the 1 minute is a lot of data. If you're going to use the 5-minute, order flow on the 5-minute intraday is so important. So if we're holding order blocks on the 5-minute, like this from Friday, or if we're creating for value gaps and we're holding that in closing, watch the 5-minute very intently when you're forming a trade setup. Because if we are holding an order block on the 5-minute, that's always going to take priority over whatever the heck the 1 minute is doing. So if you're confused by the 1 minute chart, like what's the true setup, what's the data we're being given, always just look for the 15 and 5. That'll clear it up majority of the time. Looking at the order flow and looking at where the candle's closing relative on the fair value gap. So something like this, right? This is the 5 minute chart. We're zoomed in all the way. 930 was right here, and your fair value gap on the 5 minute. The 1 minute may be forming a breaker, or maybe forming a market maker buy model just in this range. But if the 5 minute is closing all the way below this fair value gap completely and holding an order block, I guess technically this would be the order block. This should be extremely powerful in framing a bias, even on the 1 minute too, but it's going to be subsequent to the 1 hour, then 15, then 5, then 1. So if your higher time frame bias is not taking priority over your basically the directions of your trade. So if you're going against your higher time frame bias, it doesn't even have to be that high. It can be 15-minute chart. If you're trading against that, no, it's going to be probably more scalpy. It's going to be in and out quickly, or you're going to have a high resistance liquidity run. And neither one is fun to be in. So just figure out what time frame you want to use as your bias. It could either be the daily, it could be the 4 hour. You may have to just wait. You may only get like 1 or 2 setups a week, which is it's really all you need. But if you're looking on an everyday basis, I don't think it's ever going to be good to look on an everyday basis. There's no reason that you should be trading every day, especially when there's low probability days. So if you think that you come into the chart and you have to trade every day and there's going to be a setup every day, you're basically wrong, because you're not going to be able to read it perfectly every day. It may be there, but you're not going to be able to read it perfectly while it's happening. So focus on 8:30 news days. Focus on days where you know it's going to be a certain profile, or you can just wait to see what happens the first 15 minutes. If it's chopping around like this and it's consolidating between 9:30 and 10 o'clock, and you know, okay, I'm just looking for a high quality entry and this is not what I'm looking for, it's just taking both sides of the market, you just sit out. You may have to miss a move like this, which is fine. But if you go back and look at how many times 50 points plays out per week, it's really all you need. So don't make your goal further than it needs to be. And obviously you can push that goal eventually, like 50 points, then next week 55, then 60, and on and on and on. But in the beginning, you should really not be targeting more than 50 points a week. And you can obviously do the math of whatever contracts you want to use, but really that range between, I think a range between 20 and 40 points per week should be pretty easy to get to per week. That's basically just one. It doesn't have to be a high quality trade setup. You can scalp 20 points basically on anything, but 20 to 40 points is the easy range. Then 40 to 60, I think, is a little bit more difficult, but that's the manageable threshold. And then anything above maybe 75 per week is definitely achievable. It's easily achievable. But then you're going to a range where, as you approach 100 points per week, you're doing very well with your tape reading and very well with actually understanding the markets. And it could just be one high quality setup. Like maybe all you're waiting for is an ERL to IRL run, and it has to always start with the London session high or low. And that probably will happen a couple times. Or maybe you're just targeting the London session low in your framework, IRL to ERL. Like how many times does that play out? Well, this case, if London low and London high are already taken out, there's no trade. But here we're going from the sell side to premium. So ERL to IRL. And obviously you could frame a setup just based on whatever you're comfortable with. Maybe you don't use order blocks, maybe you just use fair value gaps, which I think is perfectly fine. I think in the beginning, if you're learning it, highs, lows, fair value gaps is all you need. And then once you get into a deep understanding of that, then look to learn order blocks. And I'm not even talking about breakers and change in state of delivery or anything like that, but just where do the order blocks form relative to fair value gaps? So if we have a gap like this and the order block is all the way below it, we're going to most likely touch into that order block. And when do we create gaps like this where it's a breakaway gap and we don't tap into the order block here? So study those things, and then you can get really good at reading order flow, because order flow is technically just order block ranges. But if you look at the 15 and 5 minute, it's extremely helpful when you're framing a bias, because you can just look at basically order blocks on these time frames, and it's much easier, I think, if you just look at, okay, are we holding the order block or are we holding the fair value gap? And in my mind, order blocks take priority when I'm finding a bias. Like if you come up and hold this order block and trade lower, and now we're holding the bearish side, you look for bearish setups. But anyways, yeah, I'll let you know as soon as it's posted. It should be posted by Monday. There's no reason it wouldn't be. I'll keep it shorter. The NYAM PDF, this one, you can resort to for now if you want to study between now and then. Let me see if I can find it. This one right here. That's the full guide. It's a little bit outdated, I would say, but there's still good data in there. Yeah, the time PDF. All right, well, I think we'll wrap it up there. Just a shorter stream covering the setups, just quick stuff. There will be a stream most likely on Tuesday, Lord willing. I don't know what the news profile is for next week, but probably a self stream or a stream recap on Monday, and then we'll finish it out. So if you got any questions that were not answered, if anything pops up later, shoot me a DM. I'll be more than happy to respond. If you want backtesting data, PDFs, things like that, should either be posted in the Discord somewhere, or you can shoot me a DM as well. So until I see you guys next time, stay safe, enjoy the weekend, and we will talk soon. Peace.